according to something. Today we'll be talking about the economic indicators, news, events in futures trading. Because it's really important to understand the impact of those things and on the market. Because the candles that are moving up and down, they're not moving up and down randomly. There's a reason behind them. They're moving that way. Now, when we're looking for an entry, it's different than when we're looking for the overall picture of the market. For me, before I can look for an entry in the market, I need to find out what's the overall picture. Should I be looking for long setups or short setups? You know, which one I'm gonna favor for the day? Because ultimately, any day, if you buy, you can make money. If you sell, you can make money on any day. It doesn't matter when you buy, timing your entries and things like that. But if we're gonna be trading with the overall flow of the market, it's best to know what's the environment is calling for. You know, so like a day like today, we had some news in the morning. I think it was PPI, if I'm not mistaken. I'm gonna go another place to go for news that I started trading the market using just doing Forex trading. I transitioned to futures. I still trade Forex, but Forex Factory is a great place to go look for news. You know, it's where you go look for your news. This little green, I'm just gonna do that. This little green thing right here, you can filter the news to know, hey, which kind of news do I want? Do I want everything, or do I want just the important stuff? So everything you're gonna see here is gonna be a red folder, meaning that's important stuff. That means you have impact. You may move the market. Like today, this morning, we had PPI at 8:30. Typically, the news for the U.S. economy comes usually at 8:30 Eastern time. Sometime at 10 o'clock, we get some news also. So on Thursdays, we always have this news on Thursday. The unemployment claims, every Thursday, the private sector, the unemployment claim, you're gonna see that. You're gonna see that on every Thursday. This news right here.
Does that all depend on what you're trading to, or?
Yeah, it affects the whole market really, but especially if you're trading the indices, yeah, you want to definitely to know that, because even if you're trading gold or crude oil, it will affect it. Especially gold. Gold is very sensitive to those kind of news as well. So, and we'll go on why later on. So, PPI, which is a producer, I think it's a producer index. You know, if it's lower than expected, that's bad news. Because, you know, it's as you can see, the actual was lower than what those forecasts. This is the forecast. I'm just doing this on the fly so I can show you how to read this. This is the previous one column. This is the forecast. This is the actual. So the green, something that's green, that means good news for the economy. Something that's green, good news. If it's red, it's bad news. Usually, it's really associated with the currency, but it's really for the economy of that particular country. Like at 2 a.m. this morning, we had some British pound news that UK GDP was better than expected. So GDP month over month, GDP stands for gross domestic product, which is the amount of goods and services that are being produced in a particular economy. But this is a good place to go look. And there's other ones like investing.com has a calendar as well that you can use. It really depends on which one you prefer. And let me go ahead and clear that.
When you look at this chart, do you look at this like early in the morning before the market's open, right?
Yeah, you look at that before the market opens, or you look at that sometimes the 10 o'clock news, the market's already open. So you want to keep an eye on that. So usually if there's 10 o'clock news, I'm not gonna trade between 9:30 and 10. I'm gonna wait for the news to come. Now, if there's 8:30 news, I may trade after 9 o'clock. I can look at how the market reacted on that. Actually, we're gonna look at this real time in a little bit. We're gonna go back for this morning to see how the market reacted and what made me say, hey, today I'm gonna go long. Let's look at some, like for example, Tuesday, the 25th. There's gonna be some 10 o'clock news coming out. You know, consumer confidence. So I'm definitely not going to trade the open because I want to wait for the news. Give it another 30 minutes to settle. Maybe at 10:30, 11 o'clock, that's when I might start looking forward to trade. Or if I'm going to trade, I'm going to trade way before that. You know, even the European session sometimes can be pretty decent to trade if you can be up early. Or sometimes I trade, you know, I put a trade or two in the Asian session. It's a little slower, but you can, if you know what you're doing, you can make money in any session, really. but some sessions we have more movement than others. So let's go back. I wanted to show the investing.com one, and then we'll dive into the lesson because it's important. This is where you get your news. Say, hey, where do I get my news? So economic calendar right here. Click on that. Investing.com. You can do the same thing. The same way I filter stuff on with Forex Factory, I can go to filter. I can say I just want to know the high impact ones. So this is medium. This is like a low impact. This is really like non-economic, some whatever other news that does affect the economy. And also I want to know which events I want. Inflation, employment, central bank speeches, and different things that happens. So I can which currency I want on here. The same thing you can do here with investing.com. Which country you want the news about. It's the United Kingdom. We already have those major economies checked already. United States, Switzerland, South Korea, even, I should check on here, but I don't know why. But New Zealand is another big economy that you want to check because they have a lot of commerce going on between them and China. Same thing with Australia. You want that. The Eurozone, of course, you want that. So you can see, okay, which country I want. And I think here you can also do what kind of impact. Yeah, if you want, what kind of things you want. Employment. If you want see here, importance. 1 star is not that important. 2 stars, kind of important, but 3 stars, definitely you want that. You can select the importance, if it's important, credit, bonds. You can filter it. You don't have to look at everything. So here, I just do apply. Now I'm going to have less things to focus on. See that? That's today. This is why we had today. Same information we had at Forex Factory. If you put them together, side by side, do a side-by-side comparison right here. Oh yeah, let's come on right here. So as you can see, we had 2 a.m. All the times I listed Eastern time. 2 a.m. and 2 a.m. here. 8:30 we have 3 things, and they have 2 things here. But core PPI, jobless claims. Jobless claims, when the number is lower than expected, it's a good thing. That means there's less people that file for unemployment. All right, so we're gonna go. We'll dive in those later on. But okay, let's go back to this. So we got to understand how those impact the market. What those numbers mean when the number comes out. Not only what the numbers mean, but we got to watch the reaction to the market, because sometimes we can have a good number, but the market doesn't react the way that you think it's gonna react. So it's important to just give it some time to settle, because a lot of times people want to trade the news, which is almost like, you borderline gambling, because the market sometimes what they're going to do, they're going to go up and down, trying to feel both buyers and sellers, and eventually both people can get cremated. By cremated, I mean more people can get hurt. Both people can lose money. They buy or sell. A lot of times people say, I'm just going to straddle the market. Market's going to go, sometimes they said, hey, I'm just going to straddle. The market is right here when the news come out. So I'm going to put my order to buy here. If it goes up, I'm going to put my order here to sell. And then what the market maker is going to do, the market was trading like this, and they're going to take you up and they go back down. And not only now, if you were long, your position, your stop probably was right there. So you get stopped out. If you were short, you got filled, and then they go back up. Your stop was right here, you get stopped again. So trading the news is really tricky. So you gotta understand what you're doing, and really, if you can, at all costs, try to avoid it. Because it's really not worth it, because the market's gonna be there tomorrow. Because that's a lesson that really we as traders we gotta realize the opportunity that's here today. It may not be the same one, but there's gonna be some tomorrow coming up. So you don't have to get all of it today. Keeping up with the news and what's coming up, when to trade, because it's as important to know when to trade and when not to trade. Every first Friday of the month, we know, hey, this is non-farm payroll. The job numbers are coming out. 8:30, you should be out of the market. You shouldn't be trying to get into the market at that time, because at that time, what they're going to be doing is resetting a lot of positions. If you're short, they're going to try to clear you out. If you're long, they'll try to clear you out and just reset the whole thing. So you might as well just wait for the reset to happen. And then when they pick a direction, then you jump in. Usually that direction is probably going to be at least 30 minutes before or after. Sometimes sooner, but again, you can't be trading at 8:30 on the dot, because you're definitely gambling at that time. So let's start. So what are the role of those things? they really give us really what's going on with the economy. If the job numbers are going up, there's more unemployment going on, and unemployment rate is going lower. So that means the economy, is probably healthy. And that's what based on those numbers. Because even though those numbers, we all know, they're usually not really representative of what's actually happening. They just give you an idea. So we can go back. Like inflation, that's a number that we keep talking about. Hey, inflation is 2 or 3%. But really, when you talk about inflation, I don't know about you. When I go to the supermarket now, when I'm looking at pre-COVID prices, and now there's like 40-50% more.
Yes, the
That's
gas affects that too, though. The gas
Mhm.
prices affect that too, because if you have higher prices, that's going to have a ripple effect in the
Yeah,
economy,
yeah,
because
gas.
hey, we're not gonna have, or crude oil, you're not going to have, hey, if I deliver all this bread to a superstore, well, I'm gonna charge more for bread because it's costing me more for gas, so it's going to be
Oh yeah,
something like that.
that's definitely have affect everything. So basically, they just tell us what's going on as far as general idea, what's going on as far as the health of the economy. So once we monitor those things, we can see, okay, how they can impact the price action that we're trading. Because mainly my decisions are made by looking at the chart, but I got to be aware of those things. I got to be aware of those things. So there's some things to consider. There's some leading indicators. If those things are going in the right direction, we know there could be, not must, but there could be a move coming up on the positive side for the market. If they're going down, that means there could be, a negative move coming. As futures traders, we don't care which way it's gonna go. We just need to know which direction, and once we get that direction right, just gonna ride that trend down or up as much as we can.
Okay.
Some of the leading indicators, you got consumer confidence, PMI, purchasing managers index, housing starts, how many houses are being built. That tells you what's gonna happen probably in the future. Yeah, we're talking about future. We're not talking about that long term, but at least for the next few months, or maybe within a year. So that's something that we got to look at. We got to look at to understand what the market may go. We don't know, but we have to have an idea. Some lagging indicators, okay? Things that after the fact, because the job numbers that you see is something that we're reporting today, but something that already happened in the past. Unemployment rate, inflation rate, GDP, all those things reflect the past performance of the indicators. So they don't, they don't give you predictive information, but you can use them to, as it says, validate or confirm a trend. And when that, typically what you're gonna see when the negative number comes for the job market, or negative number come for GDP growth, typically the market's already trending down. Typically the market already kind of factor all those things in most of the time, and then that could be confirmation for more downside. Or if it's the other way, all those things came out positive, typically you're going to see the market was already moving up, already started to move up, and that could be confirmation, that could be fuel for the market to go higher. Hello. Any questions so far about those indicators that we talked about here? The leading indicators, what's the difference between a leading and a lagging indicator? I mean, it kind of, the name itself tells you, but I just don't want to assume that
I'm good with those. Is that what you used this morning to get in, the trade? You said you had some longs, I think. Is that what you used? You used these indicators, lagging and the other as
Yeah,
well?
I did, because I looked at PMI, I looked at PPI and the unemployment, and there wasn't. It was obviously it was like a mixed reaction, because when you have two news come out at the same time, that's another thing. If two news items come out at the same time, this morning was a mix for the U.S. This was a mix. The news was mixed. So when the news is mixed like this, you're not gonna find big movement toward either way, usually. So if the issue is both negative, then you probably see a lot of downside to it. Since we're talking about that, let me go to the chart real quick and show you. For me, what I did is about 8:30 this morning, this is what the market was. Looking at, I'm just gonna put up. Let me just do this. Let me just do my markers and stuff so I can. Yeah, no, that about 8:30 this morning. This is where the market was trading. Yeah, right around this area. This is where the market was trading about 8:30 this morning. That big red candle is a positive candle. This is actually after 8:30 at 9 o'clock. It closed at 9. See that line right here? That's 9 o'clock. So when I see this happen after the news, I'm like, okay, the market was already trending kind of up already. If you look at this, the market was kind of going up. This peak here is to take some people short. The people that had the short right there, they took them out short and then they reversed on it. So when this happened, I'm like, okay, now my bias is to the upside. First of all, I'm above the VWAP. The market, there was some jitter happening around 8:30 here. 9 o'clock, we got a nice candle. So anything above here, I'm gonna go long. And as you can see, that range been respected the whole day. Yeah.
I saw that. Yeah, kind of
The whole
stayed
day, the
within that
market been
20 to
above that.
27. Yeah.
Yeah. So
Okay.
for me, I was like, okay, this is the range I'm gonna try to, if it be above that, I'm gonna trade there. So I think I went for the ES. You know what? This is why I can see that, because that's the one I'm looking at. If I look at this account, I trade. See here, earlier I went long above that range right here when this candle happened. And I still in that trade. Again, this is just a demo trade, real. But let me just move my stuff to break even. That's all I'm looking at it. So for me, everything I was trying to do today was long. Once I see there was no follow through being after this candle. This candle was there to trick some people. And this candle happened closed at 8:42. Ninja Trader, when you put your mouse on a candle, if it's a time base, it's going to tell you when the candle closed. So this particular candle closed, this one here that went down, that big wick closed at 8:42. So I wasn't going to look at the market. When I started looking at the market around, like I said, I started looking late. This was 10 o'clock, 10, 11. So that's why I'm going to go along here. And same thing happened with the NASDAQ. See, I'm going to show you the NASDAQ. NASDAQ was basically the same thing. I went long in the NASDAQ right here. And this is where I went by 11:24, and I got out over here because there was a resistance from a different chart. Yeah, again, everything was not same thing with the RTY. The RTY trade, my thing was, again, this was the same thing. RTY, it went up, waited for a pullback, and when it right over here, as you can see, there was that little buy right here. I think this one came back and tagged me break even. See, this is what happened. He went up because my target was around this area. Wow, he missed it. I think it was 4 points. So I went in at 59.3. So 63.3 was my target. He missed it. It came back down and tagged me and went back up.
Okay.
You know, and that was a break-even trade. Crude oil, I trade crude oil as well. I'm just going to show you the trade that I took today. Crude oil, the reason crude oil was kind of the same thing. Crude oil was up. That was again, this is one of those things you got to understand what counter trend trading is. So more advanced. I know this was an uptrend today, but this was a reversal to the VWAP, or to the VWAP area. So that's when I went short here. See that? This is a short trade here, and I bought back over here about 40 ticks. Also I'm looking at all those indicators that tells me, hey, we retracing. And if I put my fib in, that retracement level is probably 1618. That's what they wanted to go for. See, 1618 area. So it's the 1618 and 76.9. So this is when they went and bounced it back up. Now they're just really going sideways. Everybody made their money here, and also the market. If everybody bought here, what they're gonna have to sell up here to get out of those buys. So that was a profit taking going on.
Right.
So you gotta understand everything in context here. Yeah, I did use that in a sense to go to answer. That was a long answer to your question, but
I did. Yeah. Okay.
I wanted to make sure that annotate. See, let's clear everything. So I did use that information here to kind of have a real sense what the market may go today, because the market was going up. So that wasn't no chattery news that was going to make it change. So you got to understand that too. All right. So Go back to my presentation. I'm just gonna go get through the presentation, and we can ask questions later if you have any. Yeah, lagging and leading indicators. You gotta understand what they are and how important they are and what they mean. News events. Different news events happen. Central banks announcing interest rate changes, or they're having a press conference. Usually those are very, they are planned. You know when they're gonna happen. Like once a month, usually the third or second month, Wednesday, you're gonna have the Fed talking about the interest rates decision. That happened I believe that happened about 10 to 12 times a year. So if we're looking for a Wednesday here, like for example at 2 p.m. Eastern, July 20th, we know the Fed's gonna make a statement. Then they're gonna announce if they change their interest rates or not at 2 p.m. Then at 2:30, they're gonna have a press conference. So typically on Wednesday, that's a great opportunity for movement, but also it can be very wild that Wednesday. And that Wednesday in general, in the morning, you want to be in and out of the market because the market is going to be usually going sideways and waiting for the Fed announcement. So all those things you got to know. So our context is very, very important to understand those things. So news events, we know them. Natural disasters, they affect the economy too. If there's an earthquake somewhere, I remember one time I was in my early days of trading, I was trading one Japanese yen pair, and there was a big spike in it in my favor at that time. I couldn't understand. It was like a Sunday, market into forex and futures open on Sunday evening. The markets just spiked up. I'm like, why? And then when I checked the news, because there was an earthquake in Japan. The Japanese yen got weak because that earthquake gonna affect the economy. So, things like that will impact instantly. Sometimes you may not be ready. That's why it's always good to have a stop in the market because we don't know when somebody's gonna make some kind of announcement that's gonna affect the market, or this war just broke out, So all those things affect the market. So you gotta really keep abreast. One thing that I do for me, I would recommend you do also. Do you have Twitter?
I do.
Yeah, I download Twitter on my phone and I follow like the major news outlets, like it's really economy, Bloomberg, or I think there's I follow.
Let me ask you this: on the that website you were on before, where it gives all the different news and the dates, can you set that to like alerts? They can just alert you, like like an hour before the announcement or a few.
Investing.com, because I have the app, I have the investing.com app. Yeah, when news come out, I get alert. I get alerted with investing.com.
Okay. Okay.
Yeah, I get alerted.
I'm gonna set myself up with this then.
Yeah, go to
Get
investing.com and
myself
download
familiar.
that app and log in, and you can get alerts. You can set up the different alerts that you want to get with investing.com. I have that on my phone. It's important to stay up to date with that because that will affect the way that you trade that day or not trade that day. Because sometimes, again, the most important thing is not so much trying to trade all the time, but so wow, look at this push on crude oil. It's an afternoon push. So wow, usually they don't do that this late.
I know. I guess that's okay. There'll be more.
Definitely be more. See that push? There's something that happened, and there's some news going on. If I go to Forex Factory right now and refresh, there's something that happened. Let me go to Forex Factory real quick. I'm gonna show you. Usually something like that will be reported by Forex Factory. If I just refresh 10 minutes ago, which is with 210, monthly treasury statement. So this is not supposed to affect the news, but I guess it did, So you can also see the different news here. If you scroll down, you're gonna see different things that happen. You can click on them, read more about it. You can go straight to the source. You're gonna always see people make comments. So just be aware of those comments because most of this we don't know what they're talking about. Yeah, there's something that happened here. So basically, I think we're out of that trade, all three of the trades. Yeah, see that? We took out about 1 point. Again, another thing that's very important in the market, I'm always going to say that I'm going to sound like a broken record. We don't know where the market's going to go. We know where it's been, but there's nobody that can say, hey, the market's going to go there. We're just going to try to trade in a way that's going to put the odds in our favor, you know?
Hey, well, thank you, man. Thank you for helping me with this. And I guess what I wanted to ask you too is when you actually pick out your levels as far as when to get in trades. Like if you go back to that screen that you were at before with the charts. And so I see that you have, okay, so you have the value area and then you have the high value area and the low value area. So you use those as your level.
Oh, we definitely need to keep an eye on them as a level of interest. For example, when we got to this level here, we know this market got rejected. When it got back again to it, we would never want to. That's it. This candle, that red candle closed. I would never want to try to buy here because this was a rejected area already. So see it happen again. Maybe what I could have done is just put a stop above it. If he breaks it, then it may go higher. And it did go higher for about 5 points, about 4 points or so. Then it came back down. At that point also, by this time, 11 o'clock, it's kind of, as you can see, there was some choppiness going on between 10 and 11. Because most people make their money right at the market open, a few minutes after, and they go to lunch. Earlier I said they could have squared the position. They did it, and they keep pushing it up. And that squaring up may happen a little later. Today's range is not that crazy.
Yeah, that happened yesterday too when I was looking at those charts.
Today's range is not too crazy. Like when you think about what from 8:30, I'm not talking about the overnight, from 9, which is 9:36 right here. This is about 16 points. This is a very, very small range on the ES today. The NASDAQ always going to be crazy. It's going to give you a really more range. Today was pretty picture perfect. If you trade in this market and not trying to get 1 or 2 ticks, the only direction to trade this market today was long. You started from the open session going long, 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 long. Then it came back at the 10:30, gives you perfect entry here on the VWAP. All the big boys got in right here, and then the market goes up. Because the VWAP is the level that the big boys watch. They're usually going to try to enter around the VWAP. Whether they're going short or long, the VWAP is important to them. Because they're executing those big orders for the clients, they want to get the best possible price, and the VWAP give you that.
So show me where the big boys entered at again.
What about that green line right here?
Where?
Let me take this thing so I can. This wasn't a random trade. The market didn't go up here randomly. So when this candle closed, you could really just go buy and put your stop below here and ride for another. You could do a measured move, which is a measured move is basically the same amount of move going on. Let me see. I feel like I'm all over the place today, but as you answer the question, it's the same amount of move from here, from this swing to here, and here you're gonna see about the same length. So this here, if you move this same here, you would have hit your target right around here about 12:30.
Right. So the big players, do they represent the the bars, like the long bars? Are those the big players that enter the market, or
any movement within the market is happened by the big players? But sometimes it's a matter, how they're gonna stay and accumulate, or are they gonna be extend the market? That's what they're doing right now. They extended it. Everything that's happening here, either they keep it in check or they push it. So us trading 2 or 3 contracts, we don't have much effect on the market.
Right.
But this definitely was the perfect entry. And I'm not saying that in hindsight. Okay. I just want to make sure you understand this is not an hindsight thing I'm doing here. Because this is when I went long here and I have a trade to prove it. By that point, I wasn't looking at the market at 10:30. Like I said, I started looking at about 11. And that's why I decided to go along with this. After this little retracement, that big blue candle, is a negative candle. It's a bearish candle. Then when it starts going back up, I'm like, okay, you know what? This is a nice level. Yeah, there's like a little gap right here. So all those things really factor in. But we're not talking about that today. You keep distracting me.
I know. I just wanted to, I know we're going to get to that part,
We're going to get to that part. Trust me, we're going to get to that part.
I just kind of get my curiosity because a lot of people say, well, the big players come in and then they're accumulating or distributing contracts. So I just wanted to kind of put those two together. It's like, okay, how do you know they're?
Like I said, with trading, there's a million ways to trade the market. I'm sure we're gonna wrap up soon. There's a million ways to try to trade the market, but you just gotta master two or three things that go with your personality, and you gotta be aware of those things. Like some traders swear they won't be trading without put putting a fib on or putting the supply and the demand and supply zones on. So it really depends on what your style, personality, what your objective is. Some people trade volume profile, trying to get 10, 5, 10 ticks, and they trade big size, 10 contracts. If you do 10 contracts on the ES and you get 4 ticks, that's $500,
$500 times 10 contracts.
No. The 10 contract give you $500. Now, if you had 10
Oh, I see
accounts,
what you're saying. I
if you
see.
had 10
Okay.
accounts, that's $5,000. That's what we're doing Apex, and you had a copier, and you get 4 ticks on the ES, 10 contracts, that's $5,000. And that 4 ticks, you could have gotten it in 2 seconds, or you could have got it in 2 hours. Doesn't matter, So
Yeah.
you got to understand that there's a lot of ways to trade it. But for me, what I like to trade is, I'm trading, I'm not trading big amount of contracts per account. I'm trading one or two. So, I like to trade and make sure my winners are usually much, much bigger than my losers, because the losses will happen. Not everything's gonna be a win.
Right. That's right.
As long as I
Correct.
keep a good ratio compared to my losers could be an average. Again, this is average, 2 or 3 times as much as my losers. I'll be okay. First of all, if my losers are 2 times as much every time my winners are 2 times as much than my losers, I don't have to win 50% of the time. I could win 40-some% of the time and still make money, even less than that, actually. Because those people that are risking 10 points to make 1 point, that's fine. That's going to work 80% of the time. But what about those days doesn't work? What if you buy the high of the day? Whatever your system said, and the market just, so it's going to wipe out all your gains. Important. Okay, let me just finish. Yeah, let's finish this PowerPoint, and I'll let you out.
Okay. Go ahead.
So lagging and leading news events, you gotta know, what's going on. You don't have to be glued to your computer or your phone, but you gotta, before you take a trade, you're always good to see, hey, what's going on in the world. So there's economic indicators that you gotta monitor. Again, you don't have to be glued to your phone or market all the time, but yeah, if you're gonna be in the market, you gotta know, hey, what the employment situation is in this country or that country. For me, I look at it from different countries because I still trade forex, Australian dollar or New Zealand dollar. What's gonna impact those? You gotta know what's gonna impact those if you're gonna be trading them. So employment reports is important. The GDP, the health of the economy, what's being produced, all those things impact, on different things. Whether it's indices that we trade like ES or NASDAQ or currencies or forex pair, or commodities like gold or crude oil. So all those things get impacted. Inflation, we talked about that earlier. Producer price index. Yeah, that's the other P I forgot earlier. I know it was a producer index, but producer price index. That was the news that came out this morning. That's that news I showed you earlier that came out. It was a little
So
less.
going back to those indicators that you had, where you had inflation. So when the inflation news comes out, that might be a good market to kind of go short, depending on what the news is, right?
Yeah, there will be movement. Again, all movement is not created equal. So when those things come out, you gotta trade them in context. If you don't want to trade it right at the news, you gotta let it settle. Typically, what's gonna happen, like I said, they're gonna try to move up and down and wipe everybody out, and then reset the market. So news trading is not something you want to. Well, that's something we want to consider later on when you get more experience.
Right. When that news is about to come out, if it'll, like, let's say there's a certain news segment that affects the S&P, right? And that news will come back and is going to come out in an hour. So mostly, I think you told me earlier that sometimes the markets are like choppy because of the anticipation. There's like a lot of buying and selling within a range, and then when the news comes out, it's either going to go to the upside or downside. So is that mostly in the indexes, or is
It happens in everything, because crude oil, for example, Wednesday at 10:30, there's inventory numbers that come out. So every Wednesday at 10:30 for crude oil, if you go to, let's say this Wednesday, let's go back to last week, yesterday, which was the 12th. So at 10:30, where's the crude oil? Oh, maybe we don't have it here, but we'll have it in the other. Because normally crude oil it's a big deal. Let's look at next week or this week. You see that crude oil inventory is right here, 8:30 yesterday? 10:30 yesterday? I can guarantee you before 10:30 yesterday, if I go back in the chart, there was a range that was created. The market was anticipating the news, and then it broke out one way or the other. And typically what's going to happen before the inventory happened, the market's going to go the way that maybe the breakout's going to go. It can go either way. But I'm just telling you, now, this is where trader and me jump. I got to show you in the charts because telling you is one thing, but showing you is very different. Like, this is today's price action with crude oil. But that was yesterday's. So that was yesterday's action. I'm looking for the 12. This is yesterday's action, which by the way, I did trade crude oil yesterday. Like I told you, I went long here and sold right here. But see, about 10:30 yesterday, what happened is I want to go in the smaller time frame because those candles can be.
This is amazing, man. You don't trade without any indicators at all. You just go by mostly just news and just what the chart looks like. That's pretty good.
The charts will tell you. The charts will tell you a lot of things, information if you can pick up on them. As a matter of fact, when you see those reports and this like that, I go to the chart to see, okay, does the chart confirm what the report says? I just want to make sure we go back to 10:30 yesterday. Yeah, there we go. See that range right here? This is a little range that happened yesterday in crude oil because they were waiting on the news. That range was created.
Okay.
Going up and down.
At 10, and then when it came out at 10, it went up. You just played it long.
Yeah, 10:30. No, actually, the news came out here. But what they did is they go up and down. And that's what I'm saying. When the news just came out a few minutes before or after, you're going to see a lot of that going on. Then they broke to the upside.
Then they broke to the upside.
Came back and test the range. Okay? When they test the range, again, we're above the VWAP. So all my bias is to the upside. So that's why I went long yesterday. So I'm going to take this out. So when it came back down, not even if you touched the VWAP, but I went long at some point. Later on, you're going to see my entry coming up. Entry is going to come up soon. I forget what time the day it was. I think it was later on. My entry should have been here already. Is the entry right here? Okay, I'm like, okay, it's past. Okay, my entry was right here. Okay, I know entry wasn't that late. So when you see all that thing happening like that, you gotta, you gotta know, hey, my entry came out here and we tag me out here for my profit target. So anyway, I was saying all this to say you gotta look at the news as a blessing, but also it can be a curse because the news give you a lot of movement, but also you gotta know how to use it. So all those things tells you how the economy is doing, and employment report, GDP. You can do some more research on those. CPI, consumer price index, which is measure inflation. If prices are rising faster than people pay, definitely got inflation. Producer price index, if that's rising, that means things are costing more for people to produce. So that means it's gonna transfer into the economy. People are gonna be paying more for this stuff because everything really comes back down to the consumer. Because if it takes me more money to make this widget, so I'm gonna have to charge you more for the same widget that you bought 2 years ago, because now it's more money. So it's all about supply and demand. And also just basically, inflation is very, very important to understand what it does to the economy and also the overall trading environment. There's a lot of fear that happen. When the fears happen, fear is usually an idea. We're going to see a lot of volatility. Central banks announcements, it's important to know. Like we talked about the FOMC, but each major central bank, like the Australian Central Bank, the RBA, the Royal Bank of Australia, RBNZ, the Royal Bank of New Zealand, all those things, the Bank of England, BOE, ECB, European Central Bank, all those banks, they have different things in the calendar that's going to be affecting really the world economy, because those big, like the ECB, it's Europe. It's a big, big economy, all those countries together. So China, you got to know when the China news are coming out. All that is in the calendar. So you got to definitely keep track of those things before you take a trade, interest rates. How you interpret the data is very, very important. We're not economists, but at least we gotta know what those numbers mean. You know, when something comes lower or higher, is it good or bad? Because it could become higher, it's bad. Because lower, it's good. You know, it depends on what it is. So the sentiment, that's another analysis. Usually people talk about fundamental analysis, technical analysis, but sentiment analysis is very important because this is what ultimately is going to determine if the market goes up and down. Because the news could be right, the news could be good, but the market still go down because the sentiment wasn't in line with that news. So, you know, we talk about conflicting data sometimes earlier, like a mixed data. We had a good number on the jobless claims, and then the PPI index was, so that's why there wasn't much movement from that news per se. But the trend was already up. That's why I said, you know what, this is an uptrend. I'm gonna stay in the uptrend, look for an entry point up for up move. That doesn't mean it's gonna work every time, but today it did work. News trading again can be very tempting because there's a lot of movement that can happen in a split second. The Nasdaq can move, for example, 50 points in 2 seconds based on the news. Now, if you are in the right position, if you are long, it goes up, that's great for you. Well, also, you can blow your account in 2 seconds too. So taking that into consideration, sometimes news trading may not be worth it, especially if you're just starting. You don't want to be trading the news, especially right at the news, you know? Even again, 2 p.m. every one, like one Wednesday a month. There's a lot of fluctuation. First Friday of the month, there's a lot of people anticipate that news, and they know, hey, you know what? And as a matter of fact, there's some traders that I know, they only trade the news or around the news. They don't trade the news per se. At 8:30, just click buy or sell when the news come out, but they're gonna be basically they make an appointment. As a matter of fact, there's a company that I know, they call them appointment trading or something like that. Where they come, when the news come out, they come and sit down and look what's going to happen, and they go up or they buy or sell based on how the market reacting and things like that. Yeah, this is more advanced things. News trading can definitely be tricky. That's not something you want to. There's so many other ways you can trade, you know.
I mean, that wouldn't be my sole, way of trading, but it would, I would just use it along with some,
What I tell people is, if you can trade regularly without the news trading is just a bonus. You know, it just can fuel your gains really, really in a short period of time, but also your losses can be really significant too if you don't have, especially if you don't have proper risk management, or trading too big of a size, or the stop loss are not in the right place. Because the stop loss, where you put them, is very, very important because the market's going to try to get them. You know, because that's what the market is there. The stop loss is in order, and the market duty is to fill orders. The market really primary goal is to fill orders, so they're gonna get filled, and you don't want the stop loss to be filled. You want the targets to be filled, but not the stop loss. But anyway, volatility trading again. If there's a lot of movement in the market, people like to trade that way. Or if there's no movement, some people prefer range trading. If the market's in a range, some people do better, or the strategy or the personality matches that better. Risk management is very important to not trade too much, not too big of a size, reduce your position size, use stop loss. I already kind of touch on that. Slippage can happen when you got a worse price than you anticipated. Sometimes you may not be able to, if you have a stop loss, the broker, every broker on the planet tells you, hey, your stops are not guaranteed. Whatever order you put in the market, it's not guaranteed to be filled at that price. So stay informed. Ultimately, what you want to do, if you're going to trade around the news, you want to definitely go back because the calendar will give you what the news happened, you already have those numbers. So you can go back and do some back testing, which, by the way, it's really, really important when you're trying to trade, back testing, because that's what's going to give you the confidence to trade your system no matter what happens. Because sometimes you're going to have one losing streak, they go, yeah, the system is no good. No, the system is not that good. It's just going through a bad period right now. Or the person who's operating the system, which is me, the trader, may need to take a step back and look at different things that they may not doing right. They may not be executing the plan right. They may overreacting to certain movement, and they move the stock too early, or they close the position. Maybe they were halfway to the stop loss. So yeah, I'm just going to close it. PL gets in. There's a lot of things that goes into a winning streak or a losing streak. It's not just the system. 80% of trading is psychology. Everything else comes after. So you gotta definitely practice in the similar account, like this says the slide is saying here, and make sure you understand the risks that are involved. So next, we're gonna talk about more psychology about how we're gonna talk about how you can stay disciplined through a losing streak or through a winning streak. Believe it or not, both are dangerous. Winning streak is very dangerous because you can get overconfident. A losing streak can be dangerous, then you can be start chasing the market and really also not executing your plan because now you're fearful. You're gonna focus on the outcome. All we gotta focus as traders is focus on the process, not the outcome. The outcome gonna take care of itself. Like this is what you call the initial balance earlier this morning. So when this happened today, I know when this closed, I know if there's nothing happened below this, I'm not gonna sell this market. There was so many indications this market was gonna go up today, from the time it opened, which is right on here. So, from the opening session it was up overnight, kind of went choppy here. And then, that's how you do it. You just look at the different you got to look at all the clues to tells you where the market may go. Not where it will go because nobody really knows, but where it may go. So that's cool though. I think I went short in crude oil. Maybe this doesn't have the markers in there, but yeah. Any questions that you have so far?
No. I think I'm gonna go back and watch this tomorrow.
Yeah, watch it again. If you have any questions, email me. Just save them for next time. And we're meeting next Monday?
Yes.
Yeah, next Monday at 1 p.m. God willing, we'll meet. And in the meantime, I'll keep an eye on the market. So I'm gonna stop the recording.